Now, one of the toughest parts of the FBT rules to understand is how the tax is actually calculated. Now, in effect, when you as an everyday person, you buy something, you're buying it with after-tax dollars. Now, if we remember the FBT rate is the top tax rate, 45% plus Medicare of 47. If an individual on the top tax rate was to have $10,000 in their pocket, they would earn $19,000 gross, pay, give or take, $9,000 in tax to have that $10,000 benefit. So when we're talking how much tax is there on a fringe benefit, it's exactly that calculation backwards. If there's a $10,000 benefit being given out by a business, the business will pay somewhere near $9,000 of FBT on that benefit. Now, when we're talking salary sacrifice, the employee will have to salary sacrifice $19,000, being the benefit plus the tax, in order to receive that. Because the employee is not going to want to be out of pocket. If they're providing you with, let's say your wage is $100,000, they're providing you with $100,000 of non-cash benefits, they're not going to want to pay another $100,000 of tax on top of that. So they're going to turn around and say, well, no, you can only get $50,000 worth of benefits because I'm paying $50,000 of FBT. Now, it's because of this that salary sacrificing for a lot of things is not beneficial. Even if you're on the top tax bracket, there's no real point salary sacrificing because the amount of FBT the employer pays, which you will be forced to salary sacrifice for, is equal to the amount of personal tax you would pay on the $19,000 to pay for that $10,000 benefit anyway. So unless there is a concession involved or an exemption of some sort, salary sacrificing is pretty much never beneficial. Now, I will note with GST, potentially the business can claim GST on the item that's being provided, so there can be a small saving involved, but we're going to leave that out for this purpose because the amount of GST, I mean, it's typically minor and it's not worth all the hassle. So as a quick summary, as a business owner, if you're providing a non-cash benefit to an employee, you should expect to pay somewhere around 90% of the value of that benefit in tax. So in this case, $10,000 benefit, $9,000 of tax, 90%. And as a rough guide, that'll give you a good idea as to how much tax and how much salary sacrifice your employee would need to make in order to make that happen. Now, we'll talk about some concessions and exemptions in a minute, but as a quick summary, that's how the FBT's worked out. And if you're a business owner, work on that 90% rule to give you a rough guide.